Hello, my name is Tyson Romanick, Senior Portfolio Manager here at Baker Boyer, and I just wanted to thank you for joining us in this month's market update. And today I'm going to be covering bonds. I know it's not an exciting topic for most people, but it is for us, and there's a lot of opportunity there going forward. For those of you who aren't as familiar with bonds you can think of as kind of the shock absorber of your portfolio. It provides some stability, and it also provides current income to your portfolio as well. Unfortunately, it hasn't done a great job over the last 10, maybe 15 years in doing this. And the reason why is just because rates were so low. And so you weren't getting much of an income off of those bonds. And then because they were so low, you weren't really getting much protection in your portfolio against a downturn in stock. And so for 10 years or so, you had some really low rates, so bonds weren't doing much. And then we had a horrible year in 2022, which was the worst year in bond history. And so that we had some, double-digit negative returns in bonds. So it hasn't been a great place to be in quite some time. But that leads us to today, and there's a lot of opportunity there looking forward. I know it's kind of hurt to be there in the past, but looking forward, it could provide some really significant returns and protection in your portfolio. Whether you're kind of a stock-heavy portfolio and you're looking for some downside protection in case stocks take a drop if we get a recession, or you're somebody who's looking for some current income. Bonds can also, again, once provide you some great income going forward. And kind of start out what bonds can provide you and kind of get an idea. A great place to look is just what the rate they're offering. So on a treasury bond, you can get right now, I think it's around 4.6% yield on a treasury bond, which is great because you get that. And then on top of that, it's one of the best hedges against the downturn in stock. And then if you're somebody who's looking for that current income, on a corporate investment grade bond, you could get 6.5%, something we haven't seen in quite some time. And then bonds are also offering real yield, which is just a rate that's above inflation. So you're beating inflation if you're in bonds, which is something that we haven't been able to say in a while either. So on top of that, there's some upside that you might be able to see or realize in your bonds too. So right now, the Fed, they just decided that they weren't going to raise rates this time. It's looking like they're pausing a little longer than expected, but they're telling you over the next few years they're going to be dropping rates. And if they do, or when they do, you can see some extra return in your bonds when rates go down. So right now, if you're in intermediate bonds and the Fed drops the rate just 1%, that could double what you could get sitting in cash. So that's a really great opportunity we wouldn't want you to miss out on. And I know cash has been a great place to be over the last year and a half. It's felt great. You haven't had to worry about the value of it going down. But if you've accumulated a lot of cash going forward, you might want to think about maybe extending some of that into bonds so you can catch some of that upside, if rates do drop. So what does this mean in large for your portfolios? Well, over the last 10, 15 years, most of your portfolio returns has come from stock, mainly US stock. But going forward, your stock is gonna have a lot more help now with bonds in general. So you can either look at it one of two ways. You can either take the same amount of risk, and that's just the same allocation between stocks and bonds, and have a higher expected return going forward. Or you can de-risk your portfolio if you think maybe you have a little bit too much stock and have the same expected return going forward. So with that, if you have any additional questions about your portfolios or about bonds in general, please reach out to your Baker Boyer representative, and we'll see you next month. Thanks.